Welcome to our journey through the fascinating evolution of payment technologies. In this video, we'll explore how society moved from simple cash transactions to the advanced digital wallets we use today. Payment methods have always reflected the needs and technologies of their time, shaping the way we buy, sell, and interact. Understanding this evolution helps us appreciate the convenience and security we often take for granted. Let's begin by looking back at the earliest forms of payment and see how each innovation paved the way for the next. Long before coins and bills, people relied on the barter system. Goods and services were exchanged directly, with value determined by mutual agreement. While simple bartering had its limitations, such as the need for a double coincidence of wants. For example, a farmer might trade wheat for shoes, but only if the shoemaker needed wheat. This system laid the groundwork for more standardized forms of payment, as societies sought easier and more reliable ways to trade. As civilizations grew, the need for a universal medium of exchange became clear. Metal coins emerged as a solution, offering durability and standardized value. Ancient societies like the Greeks and Romans minted coins from precious metals, making trade more efficient and trustworthy. Coins could be easily carried, counted, and stored, revolutionizing commerce and paving the way for more complex economies. Introduction of paper money marked another leap forward in payment technology. First appearing in China during the Tang Dynasty, paper currency was lighter and easier to transport than coins. Governments could issue notes representing value which people trusted in exchange for goods and services. This innovation spread across the world, making large-scale trade and economic growth possible. With the rise of paper money, banks became central to the payment ecosystem. Banks provided a safe place to store wealth and facilitated transactions through checks and promissory notes. This system allowed people to transfer large sums without carrying physical cash, increasing security and convenience. The banking industry would continue to innovate, setting the stage for electronic payment. Checks and promissory notes became popular tools for transferring money without physical cash. A check allowed one person to instruct their bank to pay another, while promissory notes were written promises to pay a specific amount. These instruments made business transactions smoother and safer, especially for larger amounts. They also introduced the concept of trust in financial instruments, a key element in modern payment. Mid-20th century saw the introduction of credit cards, transforming how people paid for goods and services. Credit cards offered unprecedented convenience, allowing users to buy now and pay later. They also brought new security features and rewards programs, encouraging widespread adoption. The credit card model became a global standard, influencing the development of future payment technologies. Debit cards and automated teller machines, ATMs, further modernized payments. Debit cards allowed direct access to bank funds, while ATMs made cash withdrawals and deposits possible around the clock. This combination gave consumers greater flexibility and control over their finances, reducing reliance on cash and making banking services more accessible. Electronic funds transfer (EFT) systems enabled money to move between accounts without physical cash. EFTs made payroll, bill payments, and business transactions faster and more efficient. This technology laid the groundwork for online banking and digital payments, connecting banks and customers in new ways. With the advent of the internet, online banking became possible. Customers could check balances, transfer funds, and pay bills from their computers. This shift brought unprecedented convenience and control, allowing people to manage their finances anytime, anywhere. Online banking also set the stage for the next wave of digital payment innovations. As shopping moved online, new payment solutions emerged to meet the needs of e-commerce. Services like PayPal allowed secure transactions between buyers and sellers worldwide. These platforms offered protection against fraud and simplified the checkout process, fueling the growth of online shopping and global trade. The rise of smartphones brought mobile payments into the mainstream. Apps like Apple Pay and Google Pay let users store cards on their devices and pay with a tap. Mobile payments offered speed, convenience, and enhanced security, quickly gaining popularity in stores, restaurants, and even public transport. Contactless payment technology uses near-field communication (NFC) to enable quick, secure transactions. By simply tapping a card or phone, users can pay without swiping or inserting cards. This technology has become especially valuable for hygiene and speed, making everyday purchases smoother than ever. Digital wallets are apps or devices that securely store payment information. They allow users to make purchases online or in-store without carrying physical cards or cash. Popular digital wallets include Apple Pay, Google Pay, and Samsung Pay. These wallets use encryption and biometric authentication to keep transactions safe and simple. As payment technologies advanced, so did security measures. Encryption, tokenization, and biometric authentication protect users from fraud and theft. These innovations ensure that digital transactions are as safe, if not safer, than traditional methods. Security remains a top priority as payment systems continue to evolve. Peer-to-peer P2P payment apps like Venmo and Zelle make it easy to send money to friends and family instantly. These apps link to bank accounts or cards, streamlining everything from splitting bills to paying rent. P2P payments have become a staple of modern finance, reflecting our increasingly digital lifestyles. The introduction of cryptocurrencies like Bitcoin marked a new chapter in payment technology. Cryptocurrencies use blockchain technology to enable decentralized, secure transactions without banks. While still evolving, digital currencies offer new possibilities for global payments and financial inclusion. QR code payments allow users to scan a code with their phone to complete transactions. This method is popular in many countries for its simplicity and speed. QR codes can be used for everything from shopping to paying utility bills, making digital payments accessible to more people. Wearable devices like smartwatches now support payment functions, letting users pay with a flick of the wrist. These devices use the same secure technology as digital wallets, adding convenience for people on the go. Wearable payments are a glimpse into the future of seamless, integrated transactions. Biometric authentication uses fingerprints, facial recognition, or voice to verify identity during payments. This technology adds an extra layer of security, making it harder for unauthorized users to access accounts. Biometrics are now common in smartphones and digital wallets, enhancing both safety and convenience. Global payment networks like Visa and MasterCard connect banks, merchants, and consumers worldwide. These networks process billions of transactions daily, ensuring payments are fast, reliable, and secure. Their infrastructure supports both traditional cards and new digital payment methods, making global commerce possible. As payment technologies evolve, governments and regulators adapt to ensure safety and fairness. Regulations like PSD2 in Europe promote competition and innovation while protecting consumers. These changes help build trust in new payment systems and encourage their adoption. Digital payment technologies are helping to bring financial services to underserved populations. Mobile banking and digital wallets make it possible for people without traditional bank accounts to participate in the economy. This progress supports economic growth and reduces inequality worldwide. Artificial intelligence is increasingly used in payment systems to detect fraud, personalize experiences, and streamline operations. AI analyzes transaction patterns to spot suspicious activity and helps companies offer smarter, faster services. As technology advances, AI will play an even bigger role in shaping the future of payments. Open banking allows consumers to securely share their financial data with third-party providers. This enables new services like budgeting apps and alternative payment solutions. Open banking fosters innovation and competition, giving users more control over their financial lives. Super apps like WeChat and Alipay combine messaging, shopping, and payments in one platform. These apps are especially popular in Asia, where they serve as a one-stop shop for daily life. Super apps demonstrate how payment technologies can integrate seamlessly with other services. COVID-19 pandemic accelerated the shift to digital payments. Contactless and online transactions surged as people sought safer ways to pay. Businesses adapted quickly, and many consumers discovered the convenience of digital wallets for the first time. This shift is likely to have lasting effects on payment habits. Looking ahead, payment technologies will continue to evolve. Innovations like voice-activated payments, digital currencies, and even implantable chips are on the horizon. The focus will remain on making payments faster, safer, and more convenient for everyone. Despite the progress, challenges remain. Issues like cybersecurity threats, privacy concerns, and digital divides must be addressed. Ongoing innovation and collaboration between governments, businesses, and consumers will be essential to overcome these obstacles and ensure payment systems are safe and inclusive. From bartering to digital wallets, the evolution of payment technologies has transformed how we live and do business. Each innovation has brought greater convenience, security, and opportunity. As we look to the future, one thing is clear: payment technologies will keep evolving, shaping the way we connect and transact in an increasingly digital world.